Hey, thank you for taking the time to click on today's video. Today I'd like to address a particular type of investor. This investor is going to consider themselves to be maybe moderate, maybe even conservative. This is the person that does not like taking a lot of risks. This is the person that maybe they've experienced a lot of losses in the past, and as a result of that, they've kind of decided that from this point forward, they're not going to take risks again. And as they get older, they get closer to retirement, you know how it is. They are expecting that they want to make some changes to how they invest their money. Maybe you find yourself in this camp and consider yourself to be a conservative person. Well, the reality is that when we look on the pie charts and we look on all the different statements that financial firms send us, they're going to categorize us. We're either going to be in, say, a conservative portfolio, maybe a moderate portfolio. But let me ask you, what does that mean? What is a moderate loss? What is a moderate gain? You see, your definition of that and my definition of that and the company's definition of that and your coworker's definition of that could be very different. The reality is that the challenge is not to play small when you enter retirement. The challenge is to play smart. And how do you play smart when you're retired? Well, first and foremost, we want to remember fundamentals. Number one, we don't want to continue taking on the same risk potentially that we were taking on when we had the security of a paycheck. We want to reduce that risk if we're taking on more risk than we feel comfortable with. But more importantly, we want to explore options, opportunities like rolling our money from that 401k into an IRA. And the reason we do that is kind of twofold. Number one, moving money from a 401k to an IRA allows us the opportunity of having a much broader array of investment options. We'll talk about that in a minute. Number two, when you move money from an employer plan to an IRA, what you realize is that your mandatory 20% federal withholding or mandatory taxation goes away. If you retire and your income drops down and you go from, say, the 22% bracket to the 12% bracket, why would you want to continue taxing your withdrawals for your retirement income supplementation at 20%? Well, the answer is you wouldn't. This is the reason why you want to move money to an IRA so that you can get rid of that withholding. Now, what do I mean by don't play it small, play it smart? Well, what I see a lot of individual investors that would consider themselves to be the conservative investor doing is now all of a sudden they start chasing things like cash, money market funds, CDs. These things all have a place, don't get me wrong. But the reality is that you worked hard to save this money so you could get income. And you see, here's the difference. When you want income, you have to invest for income. And what this means is that you have to put your thinking cap on, as my mother would say. You've got to start exploring the option of income producing assets. You see, there's an entire universe of things out there that are contractual in nature, things that are a lot safer than stocks and stock mutual funds, and things that produce income, real income. Not these paltry 1 or 2% or even 3%, but we're talking 4%, 5%, 6%, 7%, or maybe even more. These are things that you can have confidence in investing your money in, knowing that you have substantially reduced your risk from that of, say, mutual funds and index funds, at the same time that you have projected and propelled your income production way, way up. You see, mutual funds can be great growth tools, but they really stink when it comes to making income. Oftentimes, this is the reason why you see so many investors taking and selling shares to get that income. But if you consider yourself to be a conservative investor, you consider yourself to be a moderate investor, this is where all of a sudden, if you can start to develop and explore opportunities and options to invest your money, even thinking about things like, well, where I've had 100% of my money in stocks and stock mutual before, maybe I only want 20% in stocks now, but I want to focus on stocks that pay me a 4 or better percent dividend. That's what playing it smart looks like. And that's what a true fiduciary whose specialty is that of income production and preservation of principal can do for you. It just takes a little bit of legwork to find one of those individuals. You can use myself or any number of individuals that are similar to me where our skill set is working with people 55 and over to help you take what you work so hard to save and turn it into income. Hopefully you've enjoyed this video. If you have, give us a thumbs up. We always appreciate this. Share this with your friends. Maybe they could use this information. And I also encourage you, if you like our little videos, hit that subscribe button and we will notify you each week that we have a new video. Hopefully this has resonated with you, you understand that you do have some options to play it smart so that you can have the retirement that you deserve. Thanks so much for watching. I'm Matthew Johnson, and remember, it's up to you to make today a great day.